Hello, good morning, and a very warm welcome to Almus Market Mornings, where we bring to you the few of the latest updates around the world. I'm your host, Shikhar Garg, and while we change our format, we still have our veterans, Mr. Jayaram Krishnamurthy and Mr. Pankaj Rathi, speaking and bringing us with exciting updates around the world for you again. Over to you, JK. Please proceed.
Hey, thank you, Shikhar. So the news from Ukraine border is occupying minds of investors, overshadowing, at least for now, economic data and even Fed rate hike prospects. With more countries announcing recall of their citizens from Ukraine, reported nuclear drills from Russian army, and President Biden calling for a meeting of the National Security Council, investors had adopted a cautious approach to risk assets getting into safe havens as we approach the weekend. However, the recent statement from Macron saying that Putin and Biden would be having a summit, of course, subject to Russia not attacking till then, has been a shot in the arm for risk sentiment. We have seen the dollar fall, gold and oil correct quite a bit, and EM currencies recover as well. We had, of course, a statement from Fed Vice Chairman Williams, somewhat soothing, on the rate hike prospects, which was ignored by the market. Global equity markets had fallen on Friday, but I expect them to recover based on the latest news. So it's a kind of a situation where we need to be nimble on what's happening, and the market actions keep shifting from buy to sell on all asset markets based on the Russia news. Dollar has put up a mixed performance. It's remained weak against the major currencies, excluding yen, but steadier against the EMs. If the situation does get worse, we feel resilience of EMs will be tested. Thanks to safe haven demand, gold has made impressive gain, and investors look for shifting riskier bonds and stocks to have a more diversified portfolio. Crude has corrected nearly 7% from the peak, although it did have another bounce before the latest news from Macron. USD stood out on Friday with a strong performance, as it was helped by a reported flow from an anchor investor for the upcoming LIC IPO. Breakup support at 74.90 provided impetus for the downside for the dollar, as it drew more exporter selling and trader unwinding of longs. Move lower was clearly against the current fundamentals and contrast dollar strength. While it does look soft on technical studies, we can also expect strong importer buying into emerge at current levels or slightly lower at 74.50, where I expect a good support to emerge. At the same time, 1 year outright forward rate, which is 1 rupee down from recent high, with the combined impact of lower premium and the spot, will not be attractive for the exporters who look to hedge long-term receivables. We remain a bit flexible. However, overall range is between 74.30 and 75.10 for the week, it looks like. Thank you.
Okay, that was brilliant, Mr. Jayaram. Now we have our another veteran, Mr. Pankaj Rathi, speaking in. Pankaj, over to you.
We've continued weekend news on a Russia-Ukraine conflict. We saw volatility in 10-year and 2-year US Treasuries. US Treasuries, 2-year US Treasuries saw a range of 1.43 to 1.52, and now dealing at 1.43. So basically hints that the risk aversion is still continue, and 10-year range in 2.03 to 1.92. Now currently dealing at 1.93. Now there is a possibility of 10-year yield dipping till 180 before FMC outcome, which will be in mid-March, before moving up again after the meeting towards 2.25 plus range. Due to warmongering, the probability of a 50 basis rate hike reduced to 21% in the month of March, then as high as 70% itself for last week. 10-year Indian GSEC yield continued getting supported at 6.65% and currently dealing at 6.66%. There could be some fall in 10-year Indian GSEC yield also before moving back to 6.95%, and this might happen when the real auctions start in month of April. But before that, there would be an auction calendar announcement itself would be interesting for 10-year GSEC yield in India. We have seen a continued volatility in 1-year forward premiums also in India during this month. This range have been 3.70% to 4.56% during this month itself, and now dealing with mid of the range at 4%.
Okay, that was good, Jayaram sir and Pankaj sir. Uh, Continuing, if we have to talk about geopolitical tensions, we cannot ignore gold. So we can see and observe gold has advanced to its high in the last 8 months and has now come back trading in the range of $1890s per ounce. The geopolitical concerns have taken the center stage, outweighing the bearish sentiments from the potential rate rises. This can possibly dampen some demand for the non-interest bearing metals or the precious metals as we call them, as we have some more clear updates on the geopolitical fronts. If we have to talk about cryptos, we have another major central economy or the European Union officials mentioning that they are open to cryptocurrencies. But now there's a big but, which is with regulations. What these regulations will be, we'll have to wait and watch. Another update is the good big fund backed brokerages are now getting their hands into cryptocurrency trading. The trading volumes, which have been scarce or pretty limited, will now find some boost with these players coming in and possibly get even more better when it comes to trading cryptos. That's it for today. Thank you so much, guys, for joining in. We'll connect again tomorrow. Thank you.